Cold open, B-roll, RAM sticks under a light box, spot price charts overlaid, a shopping cart, total spinning upward. If you've tried to buy memory in the last year, you already know what this video is about. If you haven't, sit down, because the numbers here are genuinely absurd. And we mean that in the literal sense, several of the figures we're about to show you are not typos, they're not clickbait rounding, and we double-checked every one of them before putting them on screen. Consumer DRAM prices have risen somewhere between 300 and 600% off their 2024 to 2025 lows. Not doubled, not tripled. In the worst cases, sextupled. A component category that spent the better part of a decade getting cheaper, generation over generation, just had the single largest price shock in its history. And it happened in about 12 months. So today we're doing what we always do when a market breaks this hard. We're going to walk through the actual numbers, we're going to name the companies responsible, we're going to show you exactly where the money went, and we're going to talk about what, if anything, is going to fix this. Cut to host desk setup. Before we get into it, this video is sponsored by Sponsor Name. Standard 30-45 second sponsor red goes here. Keep it fully separated from the editorial section. No blending ad copy with analysis, that's not how we operate. Okay, let's get into it. Segment 1. How we got here. The timeline. To understand how bad this is, you need the timeline, because the speed of this is almost as remarkable as the magnitude. Go back to mid-2025. Memory was cheap. Historically cheap, actually. A 32GB DDR5 and 6000 kit, the kind of kit that goes in a mid-range gaming build, was routinely available for under $90. DDR4 was even cheaper, a legacy commodity nobody thought twice about. If you were building a PC, RAM was the line item you didn't worry about. By October of 2025, that same 32GB kit had crept up to somewhere between $150 and $184, depending on the retailer. Annoying, sure, but still explainable. Normal market fluctuation, maybe some supply tightening, nothing that would make headlines. Then December happened. Spot prices for a single 16GB DDR5 chip, this is the wholesale component level price, not the finished retail kit, went from around $6.84 in September to $27.20 by the end of December. That's a 298% increase in 3 months at the chip level before it even reaches a module manufacturer, let alone a retail shelf. By early 2026, retail kits were reflecting that shock in full. Some trackers had that same 32GB DDR5 6000 kit crossing $400. By June, the cheapest in stock 32GB DDR5 kit available in the United States, according to daily retail tracking, was sitting at $374.97. High-capacity 64GB kits that used to sit comfortably between $150 and $200 were now commonly listing above $600. And on the contract side, meaning the bulk pricing that OEMs, not individual consumers, negotiate directly with the manufacturers, the forecasts kept getting revised upward mid-quarter, which almost never happens. Analysts started 2026 expecting conventional DRAM contract prices to rise 55 to 60% in the first quarter. By February, that estimate had been revised to 90 to 95%. PC-specific DRAM, the DDR4 and DDR5 modules that actually go into the machines you and I build, was singled out as the hardest hit category, with contract pricing projected to jump 105 to 110% in a single quarter. That's not a forecast miss. That's a forecast that was wrong by roughly double in the span of a few weeks, in the same direction every single time, up. To segment 2, the 3 companies. Now let's talk about who's actually setting these prices, because there are only 3 companies on Earth that matter here. 3 manufacturers control something in the neighborhood of 90% of global DRAM production. When we say the market, we mean these 3. The first is a South Korean conglomerate that posted a first quarter operating profit increase of more than 750% year on year. Not revenue, profit. Their DRAM average selling price rose more than 90% quarter over quarter in Q1 alone, with a further 50 to 60% estimated for Q2. And they're not done. Reporting out of Korea in the last few weeks has them pushing for another 20% increase in Q3 negotiations, with mobile memory potentially seeing hikes even steeper than that. The second is their domestic rival, a company whose product mix leans more heavily into high bandwidth memory for AI accelerators. Their quarterly revenue crossed 50 trillion won for the first time in company history, with an operating margin reported as high as 72%. Let that sit for a second. A 72% operating margin on a commodity component. That's not a margin you see in a competitive market. That's a margin you see when supply is being deliberately constrained and there's nowhere else for customers to go. This same company reportedly eliminated the price ceilings in its long-term supply contracts entirely, meaning any customer who thought they'd locked in protection against further increases now has no upper bound written into their agreement. The third is the American manufacturer, and their numbers are just as stark. Net profit surged more than 770% year on year. Revenue in the most recent quarter came in at $41.5 billion, up almost 350% year over year. This company's strategy has been slightly different from its Korean counterparts, retaining both price floors and price ceilings tied to committed purchase volumes in its long-term agreements, which sounds more conservative until you realize the floors themselves have moved dramatically upward. This is also the company that quietly discontinued its consumer-facing legacy brand, the one most PC builders actually recognized on store shelves, in order to concentrate on higher-margin enterprise and AI customers. All three of these companies are now individually valued north of $1 trillion. All three crossed that threshold in the same roughly 12-month window that consumer memory prices went up by as much as 600%. We're not going to sit here and tell you those two facts aren't related, because they obviously are. In segment 2B, this isn't the first time, a quick history lesson. If you've been building PCs for more than a decade, some of this might feel familiar, and it should, because DRAM pricing has always been cyclical. There was a well-documented price surge back in 2017 and 2018, driven by a mix of genuine supply tightness and allegations. Again, allegations. This ended up in litigation too. Of coordinated pricing behavior among the same handful of major manufacturers. That cycle eventually corrected. Prices came back down, and most of the industry moved on and mostly forgot about it within a couple of years. What makes this cycle different is the scale and the justification. The 2017-2018 cycle was measured in double-digit percentage increases across a year or two. This cycle produced a single-quarter revision from a 55 to 60% forecast to a 90 to 95% forecast, and retail kits that went up by 300 to 600% in about 12 months. The 2017 cycle didn't have AI demand as a talking point, because AI demand at that scale didn't exist yet. This cycle has a genuinely new structural driver. HBM and AI accelerator demand is real. It's not manufactured out of thin air, layered on top of the exact same market concentration problem that made the 2017 cycle possible in the first place. Same three players, same near total market control, new excuse. That pattern, a legitimate demand shock arriving in a market that already has almost no competitive pressure, is exactly the environment where a handful of companies can push pricing further than the underlying demand shock alone would justify, because there's no fourth or fifth competitor undercutting them to win market share. That's not a conspiracy theory. That's just what happens in a market with three suppliers and no near-term entrants. What about segment 3, why? The AI excuse and why it's only half true. The official explanation, the one you'll hear in every earnings call, is AI. And to be fair, part of it is genuinely AI. High bandwidth memory, HBM, is the specialized, extremely expensive memory stacked directly onto AI accelerator packages, and it's manufactured on the same fabrication lines using the same wafers as the ordinary DDR5 that goes into your gaming rig. When a hyperscaler shows up with a multi-year contract worth billions of dollars for HBM, and that HBM carries margins that make consumer DDR5 look like a rounding error, the decision about where to allocate wafer capacity is not a hard one for a publicly traded company to make. Every wafer that goes to HBM is a wafer that isn't going to a consumer DDR5 kit. So yes, actual real demand for AI infrastructure is part of this story. Data centers genuinely need more memory than they used to, and that demand is not fake. But here's the part that gets left out of the earnings call version of events. None of that requires punishing consumer DRAM supply this hard, this fast, unless the companies producing it also want it to happen. Manufacturers made deliberate decisions to reallocate advanced nodes and new fab capacity away from commodity DRAM and toward HBM and server product. They made deliberate decisions to accelerate the phase-out of DDR4. One of the major manufacturers has told customers it's discontinuing legacy DDR4 modules, especially server DIMMs, and another is rapidly cutting DDR4 output to a minimal share of overall production. That's not something AI demand forces you to do at this specific pace. That's a business choosing to choke off the cheaper, lower-margin legacy product on its own timeline, in a market where it and two competitors control effectively the entire global supply. When three companies with that kind of market concentration all make the same allocation decision in the same window, and all three report record-breaking profit margins as a direct result, AI demand made us do it stops being a complete explanation and starts being a PR line. Segment 4, the lawsuit. Which brings us to the part of this story that's now in a courtroom. A group of plaintiffs, individuals, and small PC building businesses has filed suit against all three manufacturers, alleging coordinated price fixing. Their claim, in short, is that conventional RAM production was deliberately throttled, in their words, in defiance of ordinary economic and business logic, specifically to manufacture this shortage and the pricing power that comes with it. The suit puts the cumulative price increase over a 4-year window at roughly 700%, and it leans heavily on the fact that building a competing fab costs somewhere in the $15 to $20 billion range and takes years, meaning no fourth competitor is realistically going to show up and undercut this pricing anytime soon. We want to be careful here, because we are not a courtroom and we're not going to tell you this lawsuit is definitely going to succeed. Price fixing is genuinely hard to prove. You need evidence of actual coordination, not just 3 companies independently reaching similar conclusions about a tight market, which is legal, versus 3 companies talking to each other about it, which is not. We don't have access to internal communications, and neither does anyone reporting on this right now. What we can tell you is that the math the plaintiffs are pointing to is the same math we just walked you through. 3 companies, roughly 90% combined market share, record margins, and price increases that outpaced even the most aggressive AI demand justification anyone in the industry has offered publicly. We'll follow this case in co-val. The segment 4B. Isn't this just supply and demand? We know what the comment section on this one is going to say, so let's address it directly. Isn't this just supply and demand doing its job? Prices go up when supply is tight and demand is high. That's how markets work, and nobody's forcing consumers to buy a specific brand. Sure, in a genuinely competitive market, that argument holds up fine. The problem is the precondition, genuinely competitive, doesn't describe this market. When 90% of global supply sits with 3 companies, standard supply and demand logic doesn't cleanly apply the way it would with, say, produce prices at a farmer's market with 40 vendors. In a market like that, if one vendor raises prices too aggressively, customers walk to the next stall. In this market, there is no next stall. There are 3 stalls, and they're reportedly all raising prices in the same direction, in the same windows, without a 4th vendor undercutting any of them to grab share. That's the entire distinction the ongoing lawsuit is trying to draw a legal line around. Not did prices go up because of real demand, which nobody disputes, but did 3 companies with the ability to coordinate choose to extract more than that demand shock alone would justify, because they knew none of them would be punished for it by a competitor? Those are 2 different claims, and conflating them is exactly the kind of thing a company's investor relations department wants you to do, because it's just supply and demand sounds a lot better on an earnings call than we have 90% market share and no meaningful competition. Segment 5, who's actually eating the cost? Let's talk about where this actually lands, because it's not landing on the 3 companies we just spent 5 minutes talking about. They're doing fine. It's landing on everyone downstream of them. Start with phones. One major manufacturer explicitly cited memory costs as the reason for raising the price of its newest handheld console to $499. Another cited storage and memory cost increases north of 2.5 times, 250%, as the driver behind an August price hike on its console lineup. Smartphone makers are reportedly eating memory and storage cost increases of more than 300% on components that used to barely register as a line item in a phone's total bill of materials. Laptop OEMs are in the same position. One boutique manufacturer raised its DDR5 upgrade pricing on its DIY laptop line by 50% and has warned customers that further increases are likely. Framework specifically has been transparent about this. They've said it publicly, on the record, rather than burying it in a footnote. Analysts at Gartner have gone further, projecting a combined 130% surge in DRAM and SSD pricing by the end of this year, which they expect to push average PC prices up by roughly 17% and knock global PC shipment volume down over 10%. The steepest contraction the PC market has seen in more than a decade. That's not a niche enthusiast problem anymore. That's an entire industry's unit economics getting rewritten by 3 suppliers. And then there's the segment that gets the least sympathy but is arguably hit hardest relative to their budgets. Individual PC builders and small system integrators, the exact group named as plaintiffs in that lawsuit we just covered. If you were planning a budget build this year, the memory kit that used to be an afterthought, the line item you didn't think twice about, is now frequently the single most expensive component on your parts list after the GPU. We've heard from builders who've had to downgrade CPU or storage choices specifically to afford the RAM kit they need, which is a genuinely strange sentence to have to say out loud in 2026. Enterprise IT departments aren't spared either. What used to be a predictable, boring line item in a hardware refresh budget, memory, the component nobody argued about in a procurement meeting, has turned into a volatile cost factor that's actively affecting project timelines. Server memory contract pricing for large purchasers has moved so much, so fast, that some organizations are reportedly delaying planned hardware refresh cycles outright simply because the budget approved 6 months ago no longer covers the same hardware today. That's not a gamer problem or a hobbyist problem. That's a problem showing up in corporate capital expenditure planning across the entire tech industry. Segment 6, the fraud problem. Whenever a component becomes this scarce and this expensive this fast, one more thing reliably shows up: counterfeiters. We've seen this pattern before with GPUs during the mining booms, and it's happening again here. Reporting has already documented counterfeit DDR5 modules built from essentially empty plastic packages, with chips relabeled to pass as legitimate higher capacity or higher speed parts. That risk goes up specifically because scarce components command premium prices, which makes faking them more profitable and makes buyers more willing to take a chance on a listing that looks slightly too good to be true. If you're shopping in this market right now, buy from retailers you actually trust. And if a listing is priced meaningfully below everything else you're seeing, that's not a deal. That's a red flag. Segment 7, is there an end in sight? The honest answer is not soon, and not in the way most consumers are hoping for. New fab capacity takes years to bring online. This isn't a software problem you can patch. It's physical infrastructure that has to be built, tooled, and qualified. One major memory maker has indicated its production capacity is effectively booked through 2027. Analyst forecasts compiled as of early June place the earliest credible normalization window in late 2027, with some projections stretching into 2028. One manufacturer has specifically pointed to 2028 as the timeline before conditions normalize, and separately warned that shortages across DRAM, NAND, and HBM together could persist that long. You will, and already do, see occasional headlines about prices dipping, a specific SKU here, a small regional correction there. Treat those as noise, not trend reversals. A 64GB kit correcting 15% in a single month after tripling in the prior 6 doesn't mean the crisis is over. It means the crisis had a brief pause. The structural driver, 3 companies with near total market control choosing to prioritize the highest margin product they can produce with the wafer capacity they have, hasn't changed, and won't change until either new capacity comes online at scale or something forces a change in that allocation math. Neither of those is close. Segment 8, so what do you actually do? We're not going to pretend we have a magic answer because there isn't one, but here's the practical version. If you need memory right now for a build you're actually completing, buy what you need and stop there. Don't buy extra just in case. Don't try to time a bottom that multiple analyst firms are telling you probably isn't coming this year, and don't feed the speculative demand that's part of what got prices this distorted in the first place. If you don't need to build immediately, and you can wait, waiting is a completely reasonable strategy. Just understand you may be waiting into 2027 or later for anything resembling the pricing we had 18 months ago. Buy from retailers you trust, given what we just covered about counterfeit modules. And if you're a system integrator or a small builder getting squeezed on the B2B side, you are, according to at least one active lawsuit, not the only one who thinks something more than normal market forces is going on here. We'll keep watching that case. Segment 9, quick fire questions. Before we close out, a handful of questions we know are coming, answered quickly. Should I just switch to DDR4 to save money? Not really an option anymore in most cases. DDR4 has seen its own price hikes, doubling to tripling over the same window, and multiple manufacturers are actively winding down DDR4 production entirely to free up capacity for DDR5 and HBM. You'd be buying into a shrinking, increasingly expensive legacy platform. Not a bargain. Will used or pulled RAM be a safe workaround? It'll help your wallet, but it comes with the usual caveats around used memory. No warranty, unknown wear history, and given what we said about counterfeits, more room for something to go wrong on a marketplace listing than there was 2 years ago. Buy from sellers with real reputations and real return policies. Is this going to affect GPU prices too? Indirectly, yes. Graphics cards use their own dedicated memory, GDDR, not the DDR5 or LPDDR we've been discussing, but it's produced on overlapping fab capacity and by some of the same manufacturers, and pricing pressure in one memory category tends to bleed into adjacent ones when the underlying constraint is fab capacity itself. We're not saying GPU prices are guaranteed to spike from this specifically, but the same companies making the same allocation decisions are involved on that side too. Should I sell RAM I'm not using? If you've got kits sitting in a drawer from an old build, this is probably the best resale market memory has had in years. That's obviously not financial advice, just an observation about current market conditions. Closing. To recap, because there was a lot here. Consumer DRAM prices are up somewhere between 300 and 600% from their recent lows. 3 companies control roughly 90% of the supply, making that pricing possible. And all three are now individually worth more than $1 trillion, posting profit growth in the 750 to 770% range off the back of it. Part of that is genuine AI-driven demand for high bandwidth memory. Part of it is deliberate allocation decisions by companies that don't have meaningful competition to punish them for making those decisions. And a lawsuit is now underway trying to determine whether part of it crosses the line into something illegal. We'll keep tracking this, the Q3 contract negotiations, the lawsuit, and whatever the next round of earnings calls tries to spin this as. This is exactly the kind of story that looks completely different in 6 months, depending on how a single court filing or a single earnings call goes, and we'd rather cover it properly as it develops than speculate now about an outcome none of us actually know yet. One last thing worth saying plainly, none of this is your fault, and there's no clever purchasing trick that gets you around it. You didn't cause a memory shortage by wanting to build a PC. 3 companies with effective control of a critical global commodity made allocation decisions that maximize their own margins in a market with no realistic near-term competitor to discipline that behavior. And everyone downstream, builders, OEMs, phone makers, IT departments, you, is the one paying for it. That's the whole story, stripped of the spin. We just gave it to you with the receipts attached. If you want to see the follow-up when there's something concrete to report, you know what to do. Thanks for watching.